Let's talk about management fraud in the revenue area. If you plan to take the auditing section of the CPA exam, you need to be aware of the different types of fraud that occurs in the revenue area. And we're not talking about someone stealing assets of the business. When we say management fraud, we mean the management is intentionally misrepresenting something in the financial statements. Well, one area they like to misreport is in the sales line, the very top line of the income statement. Why do they like to do that one? Often there are sales targets that they know investors are looking for the company to hit. That puts a lot of pressure on the management to report a certain sales number, irrespective of whether or not the bottom line income number is currently good or bad. Lots of successful companies, such as Amazon, went over a decade without reporting a profit. What would drive the stock price? Reported sales. The investors figured profits would eventually come. What they wanted to see from an Amazon was constant increase in sales. Understanding the pressure on management, now let's look at the ways they can manipulate the revenue numbers on an income statement. Number one, most obvious is simply report sales that don't even exist. And for each of these, you want to think, how would an auditor, a financial statement auditor, discover that this had occurred? Well, if a sale didn't exist, there shouldn't ever be a cash inflow from that sale, right? Fake sales don't tend to generate any cash inflow. So an auditor might notice that certain sales, especially those at the end of the year, never resulted in a collection of payment from a customer. Fake sales tend to not have any documentation. Auditor might ask to see a shipping document. That document wouldn't exist if the sale was completely fake. Or the client has to try to manufacture a fake shipping document, which gives the auditor another chance to catch that something is off. An auditor shown a fake shipping document might have the talent to notice that something is not right about that document. Number two, some customers will ship goods at the end of the year to their regular customers, even though the regular customer has not requested them yet. That's a pretty good system for fraud, right? Because by the time the goods get to the customer, the year is already over. Now we're several days into January. Let's assume we're talking about a client whose financial year ends on December 31st. So they ship goods December 30th. Customer might not get them. Several days later, calls up and says, hey, this truck just showed up with a bunch of stuff I didn't order. And the client might say, well, you're probably going to order that stuff anyway, so just hang on to it, and whenever you're ready for it, then you can call us and we'll set up the payment. That's a pretty good one, right? Because the customer might not complain. The auditor might never be aware of that arrangement. Number three, offer huge discounts to customers if they buy before year end. Hopefully you're thinking, that doesn't sound like fraud, because companies have discounts all the time to try and generate revenue at a certain time of year. Yes, the problem with this one is if it is not disclosed to investors. If a company offers such huge discounts and it shifts sales from one year, speeds them up into an earlier year, that's fine to do. The SEC, though, says they want that disclosed if it is a material amount and is likely moving the stock price. Because the investors are assuming that those are organic, regular sales, and they get duped if it turns out those sales only existed because the client offered some kind of huge discount. That tends to be followed the next year by a drop-off in sales, right? Which is why investors would not like this if it wasn't disclosed to them. The SEC is really big on this revenue stuff in their most recent report from 2023, bragging about all the investigations they did. You can see this one on the screen, something called Paratium. They looked at the controller, and what is that last phrase? His role in allegedly fraudulent revenue recognition scheme. Right? Recognition in accounting means we put it on the income statement. So they accuse this person of reporting fake revenues. Number four, a client calls up a regular customer, tries to get them to buy right at the end of the year. The regular customer says, I don't need anything yet. Offer to sell now. Client says, just go ahead and buy now, but I won't send it to you, say, for another 30 days. The customer says, but well, I don't need it. I don't want to pay for stuff I don't need. The client says, don't worry about it. I won't make you pay until 30 or 60 days. Well, how is that a sale? I'm not shipping anything and I'm not making the customer pay. That's called bill and hold. That type of fraud was made famous by the man on the screen. His name was Al Dunlap, nicknamed Chainsaw Al Dunlap. Companies would bring him in to clean up and fire a lot of people, thus the name Chainsaw. He would sell off divisions. Well, one of the things he did at a company called Sunbeam to trick investors into driving up the stock price was he used this bill and hold strategy. He would have the different subsidiaries of Sunbeam, they make a lot of appliances, call their customers and say, hey, will you say you're going to buy stuff today, even though we won't ship it to you for 2 months and we won't make you pay for 2 months? They call it again, bill and hold. They send a bill to make it look like a sale occurred, but they don't actually require payment for quite a long time. He was eventually convicted of fraud. And for a while it worked, and everyone thought he was a hero, that he took this stale, boring company that just made blenders and made the stock price go up a lot. But it turns out part of it was revenue fraud. You might be thinking, oh, so bill and hold arrangements are always bad or fraud or illegal? Not necessarily. There are some rules when bill and hold arrangements are allowed. You can see that on the screen. It's included in the document on Canvas. I won't read it to you here. You can go read it on your own and see that it is possible, but auditors need to be very, very tough in this issue because it often is fraud. Number 5, the company sells inventory to related parties. And because it's a related party, they can work out a special deal with each other, which means a sale, instead of being at a market price, might be at an inflated price to drive up sales and profits, reported sales and profits. Or alternatively, they might sell to the related party at highly discounted prices. The key is, because they're a related party, you don't have an arm's length transaction and you can't trust the prices that it's being sold at. So the auditor really needs to look closely at related party transactions, and they usually need significant disclosure in the footnotes. You've probably heard of Enron from around the time you were born. Huge fraud energy company out of Houston. Ended up killing off one of the largest accounting firms that ever existed, Arthur Andersen. One of the ways Enron committed fraud was they set up all types of special purpose entities. Those would be related parties, and then they would buy and sell assets with those related parties at hugely inflated prices, making Enron look like it was very profitable when it was a house of cards. And around the year 2000, it collapsed. Stock price quickly went to zero, and a lot of Enron employees, which is thousands and thousands of people, had their retirement savings in the company stock, and they got wiped out. And the last one is what we call bundled product and services. A simple example here is, let's say there's a shipping company. They send ships out on the ocean and they want to get internet service on their ships. A company might say, okay, I will sell you internet service, but the internet service only works with my special equipment. So you have to buy my equipment, install it on your boat, and then I'll charge you a monthly fee for internet service. But you have to have both. You can't get the internet service unless you buy my equipment. That's what they mean by bundling products and services, right? The internet is the service, the equipment is the product. And if the two are linked and they're sold for one price, how does an auditor know how to break up, well, how much was the selling price for the equipment? How much was for the service? You might say, why does it matter? Well, the part that's for equipment is 100% sale today. The part that's for a service has to be spread out over however many months the service is being used. Could be 1 year, 5 years, 10 years. So very big different effects on the income statement. And it's not as simple as saying, well, we just look at what did they charge for the equipment. It's not that simple, because if that's the only company selling the equipment and the customer's just really trying to buy the service, they were forced to buy the equipment, then we don't really have a market price to go from. Very tough area for the auditors. Near the end of this document on Canvas, I give you a couple of excerpts from an academic article where a couple of professors went to track down prisoners who were in jail because they had committed financial fraud, and they interviewed them, tried to ask them, how did you get involved in the fraud? Why did you do it? How did you rationalize it to yourself? I'm not going to read these. You can read this right here. If you want to read the longer article, send me an email. I will send you the entire article. But what I wanted you to notice from a couple of quotes was how the people justified their own fraudulent actions by saying, well, the auditors were okay with it, so if the external auditor was okay with it, I assumed it was okay. They used the auditor's failure to rationalize their own activities. So those of you going into public accounting, going into financial statement, auditing profession, a lot of pressure on you. Those of you taking the CPA exam, make sure you know these common types of revenue fraud will help you answer some of the questions.